Hello, everybody. Welcome to my YouTube channel. And this video is a live trade session from technically Sunday's trade session, but it's London session kill zone, which is between 3 a.m. and 4 a.m. New York time, which is 2 a.m. to 3 a.m. my time. Market did open the day before, as you can see. Here's that gap, new week opening gap. So I did just get home from work, so I was doing this analysis while I was in the car on my way home. Also, I do apologize for the mic quality. For some reason, on my laptop, it's not picking up my voice that I use on my microphone, but it is picking up the earplugs. So I'm using earplugs, which is the same one I used in the first video. The fan might be loud. I do apologize. But to break this down, before 3 a.m., you mark out major 1 minute lows and highs. And here is the new strategy that I was talking about as well. Now, to be clear, I have not back tested Sunday London session, technically Monday London session, specifically because it is the new week and the same night. Usually I would just trade the Monday. I usually don't trade Sundays when market opens. So this is a little bit of a test. So if it is clear that price wants to go up, then I will trade with price and go up with it. Back to explaining what the strategy is. Before 3 a.m. New York time, I mark out major highs and lows as sell stops. And whichever gets liquidized first, I plan to trade the opposite way based on a market structure shift and a retracement into a fair value gap. And then I look for a buy for a 1 to 2. That is it. This strategy has been back tested on New York AM session, which is 10 a.m. to 11 a.m. New York time. I have tested this in the London session as well. Session kill zone, which is 3 a.m. to 4 a.m. New York time. Both have been profitable. And I realized today that this London session kill zone can be can be traded the day market opens. And I didn't keep that in mind while I was back testing, which is why I'm just testing it now to determine if I want to keep trading on Sundays or just keep trading Monday through Friday. Because Monday through Friday, it's 5 days. If I just trade the New York AM session, Monday through Friday, and just stick to my one trade per day, that's 5 trade opportunities. If there is an opportunity to be displayed. And then if I add in London session kill zone, then that adds another 5 different trading days. Trading sessions. And then if I add today, Sunday, London kill zone, technically Monday, then that'll be 11 trading sessions in 1 week. So it's not really necessary that I use this day, this early market, early in the week market trade. But, if it works, it works. So this is a live trade session video as well as a test to see if today is a good day to trade for the rest of my trading career. If not, I will just be sticking to Monday through Friday. I wish I could get this microphone to work. Um, I'm not exactly sure why, because I have used this microphone on this laptop before, so I am a little bit confused, but it is all good. Well, let's see if this. Oh, this one's a lot better actually. Cause I don't like see there's a little gap here and stuff. I don't like that too. It's weird. This is more clear. Let me just do the analysis. 3 a.m., 4 a.m., buy stops. I mean, sell stops. Got liquidated. I was mainly looking for this one, and then after this just kept going down, I just looked for different ones like this. Did respect this fair value gap, but I'm not gonna look too deep into it. Just gonna keep it simple. Now, if I am going by a strategy, there is a market structure shift up. This little high got broken, and then it retraced into this gap right here. But this gap is small. I don't really like it so much. I would rather have this high to be broken to be more confident in that bullish maneuver. Because if I traded this, I would have my stop loss here. It's a very tight stop loss. I want it to would have been like this. Now, will it play out? I have no idea. But the best thing about when price is bullish on a 1 minute, it will keep respecting these fair value gaps. So let's say price break structure here and also this one. There'll be another gap which I can re-enter in for another trade, which is I've back tested that on these different trading opportunities. And I don't really like this little of a gap personally to trade in. Although it does follow my trading plan, I just do not like it. As you can see, it's very fast paced on the 1 minute compared to how I used to trade on the 5 minute. Just for reference, if price comes down past this line, and I did trade this, that would have been a loss. Just it does seem to be respecting this fair value gap, which is good. Because it did close in between. Stop loss here. Now let's do here. So if this comes here, that would have been my trade for the session. Now, will it? That's a different question. I will just keep this here for reference. Oops. I really wish I had this microphone to work because I know that the fan is really loud. Yeah, see? I did get stopped out. That's why this low, I mean this high isn't really enough for me. I need like a major high. So now I'm really looking for this one. And this is like the same kind of situation here. You have this minor high and this major high. Same thing here. You have this minor high and then you have a major high. And my trade entry does have to be before 4 a.m. So it's not a big deal. If I do not get a trade, I would just recording this for like journal purposes. I watched my first video back that I ever did, and I keep thinking about how loud the fan was, and I just feel very bad. So actually, so I'm just gonna turn the fan off. I'll be right back. Oops. I hope that sounds better in the background. Although that was not a fan, it was an air purifier. But nonetheless. Now, this strategy, some people call it the ICT 2022 mentorship. Some people call it the ICT Silver Bullet because the Silver Bullet is between these two times. There's a uh, London Silver Bullet, and then there's also the New York session Silver Bullet. Technically, there's three sessions. There's 10 a.m. to 11 a.m. New York time. There is 3 a.m. to 4 a.m. New York time. And there is also 2 p.m. to 3 p.m., which is the lunch session. And I've backtested the lunch session. There's not any movement at all. It's always just consolidation or just very, very choppy movements. So I just, never paid attention to that. I don't like to trade that. So now we just wait. And one bright side about this is that I don't have to sit in front of the chart for what, 6 hours. Instead, I just have to look at it for 2 hours per day, which is very nice considering I don't get much sleep. So just having to look at something for an hour is very comforting. Knowing I can look at this chart and possibly go back to sleep. Um, but yeah, that's this. Okay, that's the one with the gaps. I'm gonna get rid of that. Yeah, FXCM is better than Oanda. Nice, good to know. And it's better for these types of videos too, because it's just a 1 hour video straight and not just choppy footage for 6 hours going on and off. Because I do feel like eventually I would have forgotten to pause the video and I would have just had the camera going for hours and I just sit in silence. Whereas now I can keep a decently conversation to absolutely nobody for an hour. So that's always a positive. So I want to see a nice zigzag and then break. So this, I don't want to see like this. Okay, well, it won't happen now. Well, it could. No, never mind. So let's say this high was here. I wouldn't. I mean, it doesn't matter anymore because it's not gonna happen. One day I'll get a nice example of it. So this is exactly the same. Yep. Wonder how this looks on the 2 minute. Absolutely horrible. Just disgusting. Ugh. I know some people trade on the 2 minute time frame. It's kind of crazy. Actually, now that I have I can. Oh no, I can't. Never mind. I lied. I think trading by the second is insane. If you can trade by the second, you're very different. Personally, I don't, nor can I, because I don't have the thing, the membership. So, as this happens, I will get my trading app ready. Because if this closes, not just a little close, but an impulsive move up, I need this thing to be clear that it wants to go up. See this little thing right here? I don't like that. It's a liquidity sweep, and I don't like it. If price is gonna make a high right here, I want price to make a nice retracement and then break a structure. We shall see. Still trying to get my social medias more buzzing, as some would say, so I can start going live and gain more followers and fans and that and whatnot. I'm not really used to trading on the 1 minute, so I'm really just marking down the reasons that price can be bearish. I mean bullish. And sometimes when you make things add up, it just looks right. You know what I mean? Like in my head right now, price engineered liquidity got swept, which also came perfectly into this fair value gap. And now it may or may not be on its way up. If only it could break this high. That would be quite nice. If it breaks that high, I would like it to do that. But it did not break that high. So it might just retrace here and then start moving back up. I also do like the 1 minute time frame because it makes you, what in the world was that? All right, well, that's a nice retracement. One thing I like about the 1 minute time frame is that it makes you think quick. It's like playing chess with the 3 minute timer or 1 minute timer. It's kind of fun, except it's not fun when you lose. Losing isn't fun. I mean, you can make it fun if you like playing scavenger hunt to figure out the reason why you lost. In this case, it's easy to figure out why I lost. It's just Sunday. No one really trades Sunday to begin with, but here I am. So this is a nice retracement. The leg down. If price breaks above anything, I would like it to break above here and then retrace. But it doesn't really seem like there will be a trade today, although there's still 15 minutes, 15 more candles. A lot can happen in 15 candles. Or, 1, 2, 3, or absolutely nothing can happen in 15 candles like it did right here. So, we shall wait. Besides trading, I hope everyone's having a good week, a good day, a good month, a good year, a good life. Today at work, I was being chased by someone with a golf club for fun, and he did not catch up to me. It's a little story for you guys. Um, I'm debating if I will ever do live content, not live, in like real life content. I think it'll be fun, but 9 times out of 10, I don't think I will have something to record. If I do have a life full of recording moments, I'll just hire a cameraman because I'm not a good cameraman, not even a good picture man at that. Um, what else is there to talk about? Although my old strategy was working for a long time and it just went on a hiatus of just nothing. I do find comfort knowing I only have 2 hours to trade each day instead of six. It's a pretty big difference. My old strategy, you so boom, I'll just do this is the hourly chart, but then it's hourly consolidation, and then 7 o'clock hits the hour. The chart it sweeps one side liquidity, then you have this pattern, and then it reaches the other side. And at this pattern looked like this. It was so this is a sell model. You have bullish, then you have this liquidity sweep, then a bigger structure, then a retracement, and then all the way down, continuation. And then you would use the Fibonacci, and then you look for like a fair value gap or an order block, etc. And then same thing would still be a 1 to 2. Whereas now, so this is on the 1 hour, and this was on the 5 minute. A little bit more dynamic, if I do say so myself. Now, with this one, oh, also, this was gold and Euro USD, which is, I still think is viable if you want to trade ICT concepts or just in general. They do have very strong moves, just personally not the ones I'm looking for as far as this. And this, GBP USD has the most moves for what I'm doing from what I've tested, which is this. So, yeah, this is 7 a.m. to 12 p.m. NY their time. Um, the price does not do anything, does it? Anyways, right now, everything's on the 1 minute, 1 minute time frame. One pair, two sets of hours of one trading sessions, 3 a.m. to 4 a.m. New York time, and 10 a.m. to 11 a.m. New York time. Right. All we're looking for, right? So this is before 3 a.m. or before 10 a.m. Boom, 10 a.m. hits. We're finding major highs and major lows that the minute makes. Wait for one of them to get swept. Then we wait for structure to form. Then we wait for a market structure shift. They shift in market structure, and then we wait for a retracement into the fair value gap, then a continuation. How easy is that? Now, this is could be more secure, more confluences on higher time frame, whereas this is just very minimal as far as what time frames it uses. Um, but it works from what I've tested. Will it work for more than 3 months this time? Let's see. We will find out. We will definitely find out. And one thing as a trader that you should learn that's helped me when I learned is that if there's no trading, if there's not a trade in a trading session, find comfort in it because you don't lose money. Sure, you don't gain any, but you don't lose any. And another thing is not trading is also part of trading. You're not going to have a trade every single day, every single session. In my old strategy, I was getting like 2 to 3 trades a week. Rarely, I don't think ever I had 4 trades a week. Um, and it was perfectly fine because even if you have one winning trade, you're still up 2% for that week. And when you put things into perspective, and if you have $100,000 account and you are up 2% for a week, you made 2,000 in one week. Sure, right now on the lower end, let's say you have $100 and you make 2%, it's only $2, which is why you shouldn't look at things money wise because it's unhealthy. I think it's way more healthy to look at things percentage wise because when you talk about return on investment, ROI, yearly yield percentage, and things like that, people always ask, what percentage return on average do you make per week? Or rarely, if you talk about stock market and CD bonds, or I mean not CD bonds, I forgot what CDs stand for, but CDs and bonds and mutual funds. People ask on average how much percentage gain do you have per month or per year? They don't talk about per week. When it comes to trading, you can put per week into the equation. Where some people are making, 10% a year, you're making 10% in a week and a half or 3 weeks, even 2 months. Even if you make 10% in 2 months, compare that to someone making 10% in a year. It's crazy. So when you've made 10% on $100 account, you've only made $10 and you want money when you first start out, and that's the problem. It's more important to learn the skill and to understand that the money will come to you from it, from learning the skill. It's my little rant for you guys. But yeah, back to this. Major highs and lows. Boom. Boom. So this one got swept first. So we're looking for buys. You have this. You have a low, a high, higher low, higher high, higher low, higher high, higher low, higher high. And you have a sweep, liquidity sweep, which is um, sell stops being rated. And as soon as you see structure continue, because technically this is a breakup structure or market structure shift. So technically it should be going down. Am I explaining this right? Yeah, yeah. Because when something goes swept, you go for the opposite. So let's say buy stops got swept. Make this a little easier. Buy stops got swept. Now, okay. Just bear with me. Boom. Buy stops got swept. Now you are looking for a market structure shift down. Then a retracement, then a continuation. Whatever side gets swept, it's always going for the opposite side, right? So the strategy, say buy stops got swept, and then you wait for a market structure shift, showing you that price is on its way to the next side of liquidity. And you might be like, hey, if that's the case, why hasn't it reached the opposite side of liquidity yet? Which could be here, or here, or even here, and here. To answer your question, it might just not happen between this hour. That's perfectly fine. It doesn't have to happen in this hour. Price can do whatever it wants. It's just based on my back testing between these 60 minutes is when it happens most frequently. And no, for that reason, I don't trade past this. I don't trade before this, except for when it hits. Can go on the hourly. When it hits 10 and 11. Make this red actually. And make this blue. That's not blue. And we're coming close to the end. Nothing will happen unless this gets broken. And then price comes down to the fair value gap and continues. But this has to happen in 4 candles. 5. Will it happen? Who knows? I sure don't. 1, 2, 3. Yep, nope, can't happen. So, this is my old strategy. Bang, no more. This is the new strategy. And also another thing, instead of entering like with my Fibonacci and whatnot, I just use my fair value gap. Still a 1 to 2. Now, what some people can do, let's say this played out, right? Say this happened. Poke structure. Don't worry about any of this. Actually, you don't have to. With the power of replay. Let's say this happened, right? This played out. Right? Random fair value gap here. Price came here. What some people can do, you mark out levels of liquidity, and let's say a 1 to 2. Let's say 1 to 1. That's my take profit one, right? Because for people who have a decent amount in their account, they have options to take partials. So I could take 50% out here. Then when it gets to this level, I can take out, I'm not good with percentages, 25%, right? So now I'm 75% out. Or maybe I could have just waited to the 1 to 2 and just automatically took 20, 75% out. Then I get my stop loss to break even. That way I can't lose. And now I just let it run till whenever. Or I could have just targeted this and then got out 100% at this liquidity line right here. There's many ways that you can trade. Personally, I like to trade a 1 to 2 every time. Will I start doing dynamic risk? Who knows? I sure don't. It is a nice thing to have to be able to do. Maybe I will. Maybe I won't. If this strategy can hang on profitably for more than 3 months, then I will. Here's the thing, there's no rush when it comes to trading. There's absolutely no rush. There's no point in rushing. It's only going to make you lose more money when you don't need to. You can just save money and save stress. Use that stress for something else. No need to stress when there's no need, you know what I mean? But as you can see, Sunday, Modern Kill Session open, Kill Zone session on Sunday open did not play out. Just went straight down, which is fine. Meaning, I will no longer be trading this day. I'll only be trading Mondays through Fridays. So starting Monday, New York AM Kill Zone session, which is 10 to 11 a.m. New York time, all the way till Friday, New York AM session Kill Zone, which is also 10 a.m. to 11 a.m. and which is 9 trading sessions for the week. I think. Two, yeah, 9. That is all for the video. I hope you guys enjoyed. I hope you guys enjoyed without the fan in the background. I bet that helped. Have a good day and make sure you stay productive. Peace.